capital, a world-class educational institution, and a private sector that can combine all three. There's no doubt Silicon Valley and Stanford is one of the leading places. So if that's what you wanted to do, you certainly picked well. How did you end up back in London as where you wanted to live?
Yes, so I had the most incredible experience at Stanford. Ended up working in the Bay Area straight after that. Still very close ties to Stanford, still teaching a class there over even after graduation, and working with a bunch of professors out there at the time. When it came to picking where I wanted to do my MBA, again, I had the choice between the Stanford of the East, as I call Harvard Business School, but also to go back to Stanford. And I knew that if I didn't leave then, I may never leave the Bay Area. It's such a special place, it's such a special bastion and ecosystem of entrepreneurship and technology and growth and ideas. I made the decision to leave just to try something new at that point. Went to Harvard for my MBA, and then had made the choice at that point to switch out of biotech, and interviewed with a whole bunch of firms, and ended up getting into that hedge fund world, doing capital raising for two large hedge funds, and one of them, Brevan Howard, was headquartered in London. So moved over to London back in 2009, and the rest is history. I've been a resident of London. My family would argue with you, Barry, and argue with anybody who asked them that I live on a plane, because I manage a global business over 7 offices, 6 of which happen to be in the U.S. So I'm stateside a lot, and also travel the rest of Europe, but home very much is London today.
So I want to rewind a little bit. I don't want to skip that middle experience.
Absolutely. When it comes to any asset management business, there are two things important. Make smart investment decisions and have investors to back you to do this. Right? And so I knew I had to master in one of those streams. And the stream I picked was I do the capital raising that enables the asset management industry engine to turn. And both Bridgewater and Brevan Howard were incredible training grounds to teach you just how to do that. But secondly, how to cover investors systematically, and how to think about the world in a holistic way, and what levers drive what others, both for macro hedge funds, as you know, and understanding how macro markets work, how they interplay with each other is incredibly important. I use that day to day when I speak to my private equity clients today. I use it all the time when it comes to understanding how markets are going to affect different types of investors. How does the oil price impact my sovereign wealth fund investors? How does what's happening with rates impact endowments and pension plans? All of it is incredibly interlinked, and it's that interlinkage that macro thinking really teaches you.
Really intriguing. So it's kind of interesting that you're in private equity, you spend time in the world of hedge funds, but you also made a number of venture investments going back to the early 2010s. Tell us a little bit about how you sort of got involved in seed and angel investing, very early stage venture investing.
We all have to decide what our gifts are to offer in the world. And one of the gifts I have to offer is how do you help businesses grow tech and get to the next level of scale. I did that with two businesses early on in the early 2010s, as you say. Bought a business called Bar4, a fitness boutique in the UK, doing something new for women, by women. Grew that over a course of 6 or 7 years, a very successful business, and sold that to a private equity-backed strategic. Did that again with a business called Mindful Chef, a healthy recipe box business that grew like gangbusters, especially over the COVID years, and sold that as well. Chairperson of the board of a publicly listed company called SFC Energy. They do clean energy fuel cells. And being able to steer entrepreneurs and enable them to realize their vision and think of tactically as well as strategically as to how to get there. So to do that, that's very much something that helps me come alive every single day.
So let's expand on that, because most people, I would imagine, think of angel investing very different than private equity investing. One is you're betting on a team, you're betting on a founder, and some innovative new idea where there may not even be be a market for that sort of thing yet, as opposed to taking the existing company and management team and product and saying, here's how to level up, here's how to make this more productive, efficient, and really reach your potential. What's the overlap, or what skills you bring from one to the other?
Well, I think the most important skill I bring is the fact that I've started my own business, grown it from scratch, and sold it to a Fortune 300. So I've seen all legs of this journey.
So not just an investor, but an operator
Or an
as well.
operator and a grower of our own business. So that's the first thing. The second thing is, you are absolutely right, Barry. The muscle it takes to grow from 0 to 10 of revenue or 0 to 10 of EBITDA is very different from the journey that takes from 10 to 100 and 100 to a million. These are different muscles, and these are different levers in the business, but also levers in mindset. I've done 0 to 10 quite a few times. So my angel investing businesses, it was very much that, hey, how do we get from 0 to 10 of EBITDA? That takes a certain amount of nimbleness, hunger, agility, scrappiness, and I love that. Having done that myself, I know what that feels like. I can relate to the entrepreneurs. I can help them duck and weave whatever's coming up.
I'm sensing the word pivot coming.
I'm not going to use it because you used it already. But you've got to be able to figure out what I call the incoming. It's life is throwing a lot at you. The market throws a lot at you. And what are you going to ignore and deflect? And what are you going to say, okay, that's the signal from this noise. That's where I double click. That takes a pattern recognition that I have. Now that said, over the last few years, once I've sold my business to Raymond James, I'm doing that other second leg of the journey. How do you take something that's established, growing, proven, and really scale it? And that's the same thing I'm doing with the public board seat at SFC, helping that management team and that board take an existing business that is doing, close to $150 million of revenue, very profitable, growing organically 30% year on year. How do you take that and scale that to the next level? How do you make that $1 billion business? And now I'm trying my hand at that second leg of the journey. But that first leg of 0 to 10, that I don't think I'm over. I think I've got real value to add to entrepreneurs there.
So let me roll even further back. You launched Siebel Capital in 2011. What made you decide, I'm going to throw out a whole new company that's focused on, was it venture or private equity?
At the beginning, it was focused both on private equity and hedge funds. Within a year and a half, I retired all our hedge fund business. Like, see the capital inflows going into the private markets opportunity. That was the right call to make. If you think about the last decade, inflows into private equity has been phenomenal, and we've been a great beneficiary of that flow and that movement. But in the early days, what enabled me to start, or what gave me the conviction to start, was really the belief that if I could, like you said to me as we walked in the door here, build it and they will come. And if they don't come, at least you're enjoying the journey for yourself. I knew I loved capital raising. I knew I could do that effectively, and I could do that for a handful of clients. And my goal very much was, let me give this a shot, and if it doesn't work, I'll go out and get a job again. I was in my early 30s. I didn't have a mortgage. I didn't have kids. I had very few liabilities. It was a risk. It was a calculated one, and I'm very glad I took it. It worked out beautifully, but it's not for the faint of heart. That's for sure. Being an entrepreneur isn't anyway. Being an entrepreneur in an industry like financial services, where there's these old and very incumbent 800-pound gorillas all around you, certainly not.
Really, really fascinating. Coming up, we continue our conversation with Sunaina Sinha, discussing her private equity experiences. I'm Barry Ritholtz. You're listening to Masters of Business on Bloomberg Radio.
Life insurance is one of those things that just about everybody needs, but few people actually have. Hey, if you die unexpectedly without life insurance, guess what? You'll leave your family with even a bigger mess. Life insurance will help replace your family's income. It'll help cover burial expenses. Life insurance can even help pay off debt like credit cards and medical bills. Life insurance can even pay for college. And if you own a business and you die, life insurance can help your business from collapsing. It can even help cover estate taxes. Life insurance has never been more affordable and needed. Plus, you can always shop around even if you have a plan and save some money. So call the Life Insurance Quote Line right now for free pricing information. 800-917-8730. 800-917-8730. 800-917-8730. That's 800-917-8730. Life can be full of risks. One thing you shouldn't take a risk with ever is your family's health insurance. If you're self-employed or you now need affordable health insurance, you need to make this free call right now and see how the Health Insurance Helpline can help you get it. We specialize in helping the self-employed and people just like you that need affordable health insurance to get it. We have short and long-term health insurance plans, and some even cover dental, vision, and prescription drugs. Don't take a risk with your family's health insurance. It's not worth it. If you're self-employed or now need affordable health insurance, call right now and learn for free how to get it. Listen, affordable health insurance plans for everyone just like you are a free phone call away. So give us a shout right now. 800-659-7540. 800-659-7540. 800-659-7540. That's 800-659.
It's time for a Tech Mobility Minute.
There's the next level of artificial intelligence called agentic AI platforms that will redefine user interaction. These agents are software applications designed to autonomously perform complex tasks on behalf of users. Unlike traditional digital assistants that respond to direct commands, agents act independently, interpreting user needs and executing multi-step tasks such as researching, purchasing, or booking. The goal is to create a hands-free experience, allowing users to delegate routine digital interactions to an intelligent, reliable digital assistant. Google's upcoming AI agent for Chrome is Project Jarvis, powered by a future version of its Gemini AI, which has the potential to redefine web-based task automation. Other AI agents under development include Microsoft Copilot Vision, Apple Intelligence, Anthropic's Claude, and OpenAI. These will become the North Star of the AI business. I'm Ken Chester.
This has been a Tech Mobility Minute.
For electric-based renewable energy and all your electrical needs, the International Brotherhood of Electrical Workers, IBEW Local 46, are your true power professionals for your home, your business, and large-scale commercial projects. As your trusted local electrician, IBEW Local 46 members specialize in renewable energy, solar panels, EV charging stations, and all electrical services. Learn more at IBEW46.com. That's IBEW46.com. IBEW Local 46. True Power Professionals. Want a simple New Year's resolution that's guaranteed to succeed? I'm talking about doing what I did and reversing that clock on hair loss. The same quick, simple one-day hair loss treatment I received from Advanced Hair begins regrowing your own natural hair the very next day, and it's even guaranteed to grow for life. You decide how much and where, and Advanced Hair does the rest. I'm speaking from personal experience. The results have been truly life-changing, and Advanced Hair has helped thousands of folks just like you and me. It's like the Morocco and Advanced Hair are the winners of the 425 Business of the Year. So celebrate this new year with a fuller head of hair and get 250 free hair grafts and $250 off. Schedule your free consultation at 425-449-8185. See what meeting your New Year's resolution could look like with the before and afters at AdvancedHair.com. 425-449-8185 or AdvancedHair.com.
To join us today. You're listening to Masters in Business with Barry Ritholtz on Bloomberg Radio.
I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. My extra special guest this week is Sunaina Shah, Global Head of Private Capital Advisory Group for Raymond James. So, early in the 2010s, you were doing some angel investing. Tell us what you were looking for, either in sectors or technologies. What attracted you to the angel space?
What attracted me to the angel space was that I was building my business and had skills and learnings I wanted to share. But more importantly, when I looked for businesses and entrepreneurs to back, it came down to really two very important criteria. The first is people. I learned that during my Mayfield Fellows program journey at Stanford, where that was drilled into us. It starts with the people, it ends with the people. And secondly, the companies and the products that we're building had to do good and do well, right? That they had to have a positive impact on the community that they operated in. So if you think about the recipe food business, that was all about healthy eating. The fitness business was all about an exercise program that's efficiently designed for women's bodies. You think about the clean energy business that I am now chair of the board of. That's all about clean energy fuel cell alternatives to diesel generators and to polluting generator types. So that's kind of the thematic that I lean into the most.
Really interesting. So you very easily could have either set this up as a VC fund or affiliated yourself with a venture group. What are the advantages to being an individual making single decision investments into a startup?
I think the biggest advantage is that there's full alignment because you're not operating with OPM, other people's money. It is your money, it's your skin in the game. The alignment of interest is one thing that you learn in private equity and all private markets investing, that it's all about alignment of interest. You can't exit these things unless you grow value and you're in sync with the founders and with the management teams because they're private businesses. So you've got to figure out if you have that match and alignment of both economic interest but also vision and execution forte into the next 3 to 5 years. That's the minimum amount of time you'll be together for. So that's why I think doing it as an individual always gave me much more reward and also, quite frankly, economic success than doing it as a fund investor. The other thing I'd add is that I found very early on that professionally speaking, in terms of my day job, Barry, what was I really good at? I was really good at the capital markets function. I was really good at the capital raising, liquidity, organization side of the business, and that's what Sibyl Capital did. So I knew that was going to be my day-to-day jam. And on the board of some of these companies, I would be able to go and add the value of how to grow their business.
So let's talk a little bit about your day job. You set up Siebel Capital in London, right?
In
That's
London.
where you founded?
Correct.
So before we get into the advisory services you provide, I'm a big Anglophile. I love
Yeah.
London. But there's such a difference between how they operate the economy and especially the financial sector. Let's talk a little bit about that. What's it like is it even bi-coastal? You're NY, you're nylon?
Nylon, that's my root.
How different is the UK finance from the US and the startup mentality? It seems that failure is not a dirty word in the US. I don't get that same vibe from Europe. Tell us a little bit about the differences.
You're absolutely right. Operating in UK and in Europe at large and the US are fundamentally different. Having been at Stanford, worked in the Bay Area, and then went to Harvard and worked in the Boston ecosystem, came out to New York. London was a bit of an adjustment, I will tell you that, because the startup ecosystem, especially in the early 2010s, was nowhere near what it was in San Francisco and the Bay Area and Boston.
I mean, that's a well-established, mature, if you could say mature startup region, but it is, and the same with Boston and New York.
100%. And so starting Sibyl Capital in London ended up being both a blessing and a curse. Why was it a blessing? It was a blessing because there was not that many startups there, period. There was not that many new entrepreneurs starting financial services companies. And so it made us very unique and able to differentiate ourselves from the UK and European market very quickly. There were not that many new entrants. And we used that to our advantage and often still do. Although the market has definitely come a long way, there are still divergences on ease of doing business. But it became very clear to me, Barry, very quickly on we would have to diversify our business to be U.S. focused. And so we opened our first office in New York a few years after we started. And we've been heavily focused on the U.S. private equity clients and U.S. institutional investors have done so from day one, knowing that actually the U.S. market is much deeper and much larger than UK or Europe could ever be, but also the speed of doing business varies quite dramatically.
So we've talked about the startup and angel world. Let's talk about the advisory work you do for private equity, both in London and the U.S. I keep coming back to there seems to be such a difference between how companies operate there and how companies operate here. Every now and then, a European company comes to the U.S. and succeeds, but more often than not, they have a hard time adjusting. And I imagine the same is true vice versa when a U.S. company goes to the UK, at least outside of finance. Finance seems to have found a foothold in Europe from the U.S. Why the cultural differences? What is it about the psychology there and here that creates such a different business and investing environment?
I think that it depends on what type of investing you do. At its heart, private equity is about buy low, sell high, right? It's a long-only strategy in the private markets. So you got to buy a business, and you got to know that you have to add value and make it larger, better, stronger, and then sell it on. So a number of the clients we have are pure play regional focused. So we have a German private equity client. We have a Benelux private equity client. We have a Nordic private equity client. We've got a UK client. And they are experts in understanding what needs to happen to grow their businesses and their companies that they're buying and selling in their target market. They know the customer base. They know how to impact the value drivers, i.e. on the talent acquisition side, on the add-on, bolt-on strategy side. They know how to do that in their regional markets incredibly well.
And I just want to interrupt and say, is it that different from Germany to the Netherlands to Sweden to the UK? Like completely, like in the United States, New York is in Florida, Florida's in Texas, Texas is in California.
That's right.
But you could hop from one place to another, and it's not so different that you can't adjust to the regional. We more or less speak kind of the same language throughout the country. Maybe there are some dialects and differences, but you know, the general gestalt of California, New York, Texas, yeah, the politics may be different, but the business seems to be the same.
Yeah.
That's not true in Europe, is it?
It depends on the size of businesses you're buying, right? If you're buying businesses that are up to, say, 10 or 20 million dollars or euros of EBITDA, then it really matters that you're a regional champion, right? That you understand how a German business can scale in that end of the market versus how a Nordic business will scale. So there having regional footholds and expertise really matters. When you're doing larger businesses, and we have clients that are pan-regional, they're like pan-European buyout players, or there are global buyout players that do global deals, U.S. and Europe, but they do them for larger businesses. And larger businesses often tend to have global customers because by definition you've got to make sure you've diversified your revenue out. So it depends on what scale of business you're doing, but even if one of the largest private equity funds out there, they will have local offices. If they know they need to operate in the Italian market, they'll have presence in Milan, or they'll have Italian experts in-house that know how to operate and buy businesses in Milan, or they'll have sector experts. If there's a software business in Italy, it will be very similar to software business in Texas. You know, the operating environment might change, but the characteristics of the business and how you drive value in that business will often be very similar. So you've got to make sure you're either a sector or a regional expert, and that often depends on the size of business you buy.
So you've lived in Africa, you've lived in India, you've lived in Vietnam, you've been to Thailand and all over Asia. Have you thought of expanding to some of these other continents, or is it just U.S. and Europe?
We do cover Asian and Middle Eastern investors in my business prolifically, and have done from almost the first day of inception. You cannot ignore the rest of the world. As you know, the sovereign wealth funds and the institutions in the Middle East are big movers in the market today. And that's today. I started covering Middle Eastern institutions when I first opened the doors of the business, now 14 years ago. And 14 years ago, people were like, I don't know if I need to go over there. It's a huge investment of time and airfare and so forth. Well, now everyone's saying, I wish I'd built those relationships long ago, because relationships die hard in those markets, Asia and Middle East, and those relationships I've had and my team has had for a long time.
Huh. So let's talk a little bit about valuation. In the public markets, hard to say, fourth quarter 2024 U.S. markets aren't, at the very least, fully priced, if not richly priced. When we look at the UK, when we look at Europe, much, much less expensive. We see a lot of companies trading at book value.
Yeah.
Not the same growth level that we see in the U.S. Does that valuation difference in the public markets extend to private markets as well?
So, firstly, let's comment on the public market side. That is characterized very much, that valuation gap is characterized by the depth of the market. The U.S. capital market is vibrant, incredibly dynamic, incredible fragmentation of investors, deep, rich market where you can do business on the capital market side pretty seamlessly.
And I would add, plus all these giant mega tech companies that certainly have rich valuations and skew, whether it's the NASDAQ 100 or the S&P 500.
Yeah.
You know, there's a handful of them overseas. Taiwan Semiconductor, ASML Photography. You can name SAP. You can name like like a handful, but most of the big ones are here,
Are here.
which certainly
Huge
skews the-
evaluation.
on the public side. What do you see on the private side?
On the private side, we see a similar valuation gap. That, and I'll just finish the public market side. The UK and the European capital markets just don't have the same depth, which is why you see the valuation mispricing. If
So you think it's more than just the tech companies? It's
Yes.
the structure.
It's structural. There's not that many participants. It's also legal and regulatory, right? In the
Mhm.
UK, there was a move away from holding UK assets by the UK pension plan. That sucked the liquidity out of the UK market,
Huh.
hence the valuation gap. So there's also regulatory angles that are at play there. On the private markets, though, I've got to agree with you entirely. There is a valuation arbitrage even in the private market.
Wow.
That the European buyout specialists are able to buy companies at better value in Europe and scale them into global businesses and sell them at global valuations or U.S. market valuations where it comes down to selling time. So some of the biggest, best private equity household names that you know, whether it's a Blackstone or an Apax or a Clayton, Dublin and Rice, have headquarters both sides of the pond because there's so much value to be harvested by buying smartly in Europe and an advantage, quite honestly, a valuation arbitrage that you can play all day long, and many of them do so very successfully.
Coming up, we continue our conversation with Sunaina Sinha, Global Head of Private Capital Advisory Group for Raymond James, talking about private capital advisory. I'm Barry Ritholtz. You're listening to Masters of Business on Bloomberg Radio.
This might be the most surprising statistic I've shared in decades of doing local news. More than 75% of commuters will be involved in a car accident at some point. JP Pendergast of Pendergast Law with more.
What makes it more surprising? The average person will be involved in 3 to 4 collisions in their lifetime.
With accidents unbelievably prevalent, what are some safety tips if it happens to you?
Safety first. Secondary collisions are not uncommon while awaiting help. Turn on those hazards and remain in a safe place. If a bystander witnessed the accident, capture their information and encourage them to remain at the scene. Seek medical attention immediately if needed, as delaying can be a costly mistake. Lastly, remember that statements made to police and insurance adjusters can affect your case.
Collisions are more common than we'd like to think. If you find yourself in one, follow these helpful tips and then call my friends at Pendergast Law.
If you or a loved one's injured in a car accident, call Pendergast Law. We can help.
PendergastLaw.com.
Your podcast.
Live businesses, breaking global headlines, and conversations with the names that move markets. Listen to Bloomberg Radio on demand anywhere you have an Amazon Alexa device. Just say, Alexa, play Bloomberg Radio.
And I'm Denise Pellegrini in the Bloomberg Newsroom. We're looking at a pickup in financial technology companies' marketing efforts. They're boosting those efforts in metropolitan hubs, including New York, San Francisco, and London, with fintech ad spending growing an average of 45% year over year, according to Outfront Media. Clients include fintechs like Mercury, Brex, Inter and Company, Klarna, Cash App, PayPal, and Venmo. Fintechs are expanding their customer bases and product lines, and they're setting the stage for potential initial public offerings or acquisitions. Investors are keeping an eye on the U.S. jobs report coming on Friday. Economists expect the pace of job creation to slow, but the unemployment rate to hold steady. The fight against inflation, meantime, is still with us, according to San Francisco Fed President Mary Daly, who remains, I think, uncomfortably above our target. Daly also does say she would not want to see further slowing in the labor market. And Fed Governor Adriana Kugler, meantime, who is a voting member of the Fed's FOMC, also thinks she's still concerned about inflation. But jobs not done. We're not at 2% yet. And Kugler also at the same event as Daly, hosted by the American Economic Association in San Francisco. She says she's watching inflation in housing and not market services. As we've been talking about, congestion pricing finally arrived in New York City as of early this morning, but Bloomberg's Bob Van Boer says the program could still run into some roadblocks.
We continue to face opposition from commuters and elected officials. And President-elect Donald Trump has spoken out against the plan, and he's vowing to stop it once he is inaugurated on January 20th.
And that fee will be $9, as we've been talking about for many drivers, $6 60th Street and below, first initiative of its kind here in the U.S. And watch for a parade of AI-related gadgets. Coming CES, the big consumer electronics show, getting underway in Vegas this coming week. One startup plans to show an AI-powered spice dispenser. SoundHound will be demonstrating use cases for generative AI in cars. And there will be some other curiosities, including in the healthcare space, like a startup that claims to perform 90-second eye exams, and a company that makes an AI-powered hormone sensor. Also, lots of freshly updated AI PCs and gaming laptops that use similar hardware. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Denise Pellegrini, and this is Bloomberg.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-890-5075. 800-890-5075. 800-890-5075. That's 800-890-5075. Paid for by Term Direct.
David was in big trouble with the IRS.
At first, I didn't owe that much, but after this year, it was out of control.
Then David called Get a Tax Lawyer.
Right away, they were like, oh yeah, looks like you're qualified to save.
Get a Tax Lawyer went to work.
Should have called way sooner.
Get a Tax Lawyer has helped thousands like David fight the IRS and get a fresh start.
Call 800-745-3070. That's 800-745-3070.
If Ernest Hemingway was alive today, would he say this to you?
Shakespeare, Mark Twain, Edgar Allan Poe, all great writers. And after reading your book, I simply must add you to the list.
Wait, you don't have a book yet. So make a free call to Page Publishing. Turn your book idea into publishing gold.
800-215-6818. 800-215-6818. That's 800-215.
This is the Bloomberg Black Business Beat. Pinky Cole has built herself an empire, and she's not planning on stopping anytime soon. She runs a chain of plant-based burger restaurants that started in Atlanta and now has locations in Alabama, Texas, and even New York City. A lot of people would be willing to stop there, but not Pinky Cole. She spoke to Bloomberg about how she doesn't think of her restaurant as the entire business, but as just one part of a lifestyle brand.
Restaurants was just a gateway to get in the door, but I'm going to world dominate with the brand in so many ways and show people that you do not have to be a one-trick pony. You can have a multifaceted brand that is sustainable, that will last throughout the years.
And Pinky Cole is sharing her success. Through her Pinky Cole Foundation, she offers financial tools and advice to others looking to start their own empire. I'm Bloomberg's Justin Milliner on the Black Business Beat.
Want a simple New Year's resolution that's guaranteed to succeed? I'm talking about doing what I did and reversing that clock on hair loss. The same quick, simple one-day hair loss treatment I received from Advanced Hair begins regrowing your own natural hair the very next day, and it's even guaranteed to grow for life. You decide how much and where, and Advanced Hair does the rest. I'm speaking from personal experience. The results have been truly life-changing, and Advanced Hair has helped tens of thousands of folks just like you and me. It's why world-class Dr. Perungo and Advanced Hair are the winners of the 425 Business of the Year. So celebrate this new year with a fuller head of hair and get 250 free hair grafts and $250 off. Schedule your free consultation at 425-449-8185. See what meeting your New Year's resolution could look like with the before and afters at advancedhair.com. 425-449-8185 or advancedhair.com.
Are you a Puget Sound Energy customer? Right now, PSE is offering the highest rebates we've ever seen. The rebates are so good that many homeowners are getting thousands of dollars of insulation upgrades for free with no money out of their pocket at all. Insulation Northwest has teamed up with PSE to help their customers save as much money and energy as possible. Insulation Northwest is the one to call for the highest rebates possible. No one can get you a higher rebate, period. Call Insulation Northwest today to schedule a free inspection, which usually takes an hour or less. We will inspect your home's insulation for free to see if you qualify for thousands of dollars of free upgrades. And we'll fill out all the rebate paperwork for you to get you instantly qualified if possible. Call Insulation Northwest today for a free inspection to see if you qualify. Insulation Northwest, the real insulation company.
InsulationNorthwest.com changes everything. You're listening to Masters in Business with Barry Ritholtz on Bloomberg Radio.
I'm Barry Ritholtz. You're listening to Masters in Business on Bloomberg Radio. My extra special guest this week is Sunaina Sinha. She's the global head of private capital advisory group for Raymond James, running about $1.6 trillion in total client assets. So we've been experiencing something here in the U.S. that I find kind of fascinating. And given your perch, I'm really curious as to what you see in the UK and Europe or the rest of the world. Over the past decade, there has been, for lack of a better word, a democratization of private equity and private debt. You used to need $20 or $10 million to participate in this. I think you can get into a number of places for $250,000, $100,000.
Less, Barry, less.
So this has, you know, when I look around at Blackstone and Carlyle and so many of the big PE firms in the U.S., they have set up parallel funds where, you know, there's really practically no minimum. Is this trend something that's U.S. focused? Are you seeing this in the UK and Europe? Tell us a little bit about private equity for everybody.
Absolutely. The entrance of private wealth into private markets, private equity in particular, has been the single biggest innovation and movement of capital from LP investors into private markets in the last 5 years. It's been happening. It started off over the last decade, but it's really over the last 3 to 5 years we've seen an acceleration. And here's the most important fact, that as ultra high net worth and high net worth individuals build out their portfolios, they're putting equities, they're putting bonds, and they're putting alternatives, and alternatives being led by private markets. The average investor in private wealth is under allocated to private equity by 3 to 5x, 3 to 500%. That is a huge number. And so the growth of private wealth as an investor in private markets has absolutely exploded over the last 2 years and will continue to do so over the next decade or so. And it's a global phenomenon. Of course, the U.S. led the way, and certainly the 40 Act regulation of allowing semi-liquid evergreen products and individuals to invest on those was a huge game change when it came to private wealth's interest in alternatives. But we're seeing the same thing in Europe. We're seeing the same thing in Asia, that individuals who have a certain net worth are saying, I want a bit of private equity in my portfolio. How do I go out to get it? And more sponsors are saying, well, I'm going to create solutions for you to access my funds and products and my alpha through accessible channels.
So in the U.S., when this really began to get popular, one of the big drivers was zero interest rates, where when bonds are yielding, that side of the portfolio really wasn't a thing, and people started looking around, hey, where can I get better yield? Private debt, private equity stepped into that and really filled that gap, especially for institutional investors. So I look around the world, and we had rates that were zero for a decade. How significant was that as a driver, and then what does it mean now that rates are appreciably higher than they were in the 2010s?
There's no doubt that rates being low helped investors seek yield and seek alpha in different markets, including in private markets. But also it helped private equity do deals, right? Leverage buyouts requires leverage, and when rates were so low, the leverage was cheap and easily accessible, and they used it for that decade of boom that we had until rates started going up. Now that rates have gone up, but they are coming back down, we can always discuss what neutral looks like. Well, we